In Forex trading, you may have heard the terms bid price and ask prices. But what do they actually mean and how do they impact your trading decisions? Simply put, the bid price is the highest price a buyer is willing to pay for a currency pair, while the ask price is the lowest price a seller is willing to accept. In the Forex market, bid price and ask prices are constantly fluctuating due to supply and demand factors. This means that traders must always be aware of the current bid and ask prices when placing their trades. When a trader buys a currency pair, they pay the ask price, while when they sell, they receive the bid price. The difference between the bid and ask price is known as the spread, which is the cost of trading in the Forex market. Understanding bid and ask prices is crucial for traders because they need to know the price at which they can enter or exit a trade. In summary, bid and ask prices are an essential part of Forex trading. By understanding how they work and monitoring them closely, traders can make informed trading decisions and avoid costly mistakes. Thanks for watching, and happy trading. If you like this video, please don't forget to hit the subscribe button and turn on the notification, so you never miss a video.